What is up, traders? You're gonna have to excuse the messy hair. I actually just woke up and spotted this trade here on the pound Aussie. What we have here is something that I like to use in my trading all of the time, and it's pointing out a very specific zone that I want to trade in. What I'm gonna do right now is actually go ahead and open a trade live with you watching so you can see that I'm actually trading based on this stuff. Let's go ahead and do that. Let's create a new order. It's gonna be a market order. We're gonna sell at market. We're gonna have a stop loss. Let's go ahead and bring on our profit taking tool. See where we want our stops and targets to go. For me, I'm gonna have a 1 ATR stop above the wicks of these candles. These are the highs that if the market, let's say, breaks above these highs in a big way, then I'm not gonna wanna stay in this trade. So what's the ATR right now? It's 62.5. So if I come down here, I have 75 plus 62 would be 137. So there we have our stop. Okay, let's go ahead and set up the trade. We're gonna have a 146 pip target and a stop loss of 137. And right here on TradingView, we can pick our risk. I want to risk 1% on this specific position, and I'll risk another 1% on my next position. Depending on your account size and your own risk tolerance, a lot of things may change in terms of what you decide to risk, but this is what I'm going to do right now in this specific trade based on my confidence in the trade. And I'm going to sell the market. There we are. So now we have our stop set. It's a little bit low because of the spread, so we have to move that up. And at this point, we are sitting in profit by $4. Whoa, no, I'm just kidding. Okay, I'll let you guys know how this trade plays out and also explain a little bit about the analysis behind this trade and tell you everything that went into it in just a second. So I'll see you in a minute. All right, guys, welcome to today's video. What I'm gonna do today is share with you guys an entry using nothing more than the wicks of candles to tell you a story that leads you to determining whether or not a market is going to go up or down. Now, we can't just use these candle wicks. We have to combine this with levels of structure, trend, and other market conditions. We're gonna talk a lot about that too, and we're also gonna go over the pound Aussie trade and how I use the wicks of the candles in that trade to tell a story that led me to shorting that market and making a 2-target winning trade. I'm not gonna waste any time here. Go ahead and click that subscribe button if you're interested in learning more about the Forex market. Click that like button and follow us on Instagram at The Trading Channel. Right now though, let's talk about candlestick wicks. So these candlestick wicks are telling you a story the entire time while the price is moving. While price is moving, it's letting you know where price has been and where price ended. Each wick tells its own particular story. And beyond the point of it being a story, the simplicity, the simple version of what I'm going to teach you today is we're looking for an area that's been tested by 5 candlestick wicks. On the 5th wick is an entry. Sounds pretty simple, right? Let's go through the pound Aussie right now, look at a few examples of this just so that you have a very clear understanding of what I'm talking about. And we'll talk more about it in just a second on the whiteboard, also showing you the exact rules, I guess you could say, for this type of entry. But this type of entry is showing you a level in the market that the market can't get past. The market, for some reason, it's just jumping up, bumping its head, jumping up, bumping its head, jumping up, bumping its head. And in doing so, it's giving you hints every time it does that, that we're going to see the market go in a certain direction, no matter which currency pair you're on. So in this case here on the pound Aussie, we have the market in a downtrend. We're breaking into new lows, looking left right here. So while we're breaking into new lows, it would be a good idea to say, okay, well, I'm looking for shorting opportunities, right? While looking for shorting opportunities, what I'm going to look for is an area in the market that's tested by at least 5 candlestick wicks. Okay, so the way we do this, the actual rules for this setup, and don't forget, we're going to go over that pound Aussie trade in just a second, and I'm going to talk to you about this entry a little bit more and the analysis behind that trade. So stick around. But also for this entry, what you need to know is that we're placing a horizontal line on the highest body from the swing high if we're going to short. This is a shorting example. So here on the pound Aussie, we have our pullback. This is our swing high. Now from that swing high, we're looking down and we are going to place a horizontal line on the highest body from that swing high. If the market was right here, I'll do this in real time for you, sort of in real time as in moving my charts to the side. So if the market was right here, this is where our horizontal line would be because that is the swing high. If we move further, we still have the same swing high. If we move further, one more candle, we have the same swing high. Right now, we have an area that the market has tested with 3 candlestick wicks. Remember, we need 5 for an entry. So then we move again and we get 4, but on that 5th candle, instead of just testing this area and the market bumping its head and moving down, we close above this area. So at this point, remember, we're looking at our swing high, we're looking down, and from that area, we're gonna put a horizontal line on the highest body since the swing high. So now on this candle that we have right here, we actually have to move our horizontal line up. And as we do, what do you notice? We have 1, 2, 3, and including this candle, we have 4 tests of this area. If we keep moving forward, we get our 5th test of this candlestick wick right here with this long red candle. At that point, the entry I would personally use, and it looks like actually, if we zoom in, let's make sure that this candle didn't touch. Okay, so at the point of moving our horizontal line up to the body of that green candle, if you can't tell, I haven't went through markets and done this. I just literally moved the market back and decided to start right here on the pound Aussie. But right here, you can see that this candle wick actually doesn't quite touch our horizontal line at the top of this body. So really we have 1, 2, counting the swing high body, the body of the swing high, whatever you want to call this. I don't have a name for it. Counting that, we have 3. This would be 4, and the 5th would actually be this long candlestick wick that comes up, tests that area again, and puts in this little shooting star candle. So in order to actually trade this, the way I would go about it would be placing a trade on that 5th test. The wick that tests for the 5th time this area, I would place the trade like so. You bring this over, and I would do something like this with a stop loss above the highest wick over here, and maybe a 1.5 or a 2-to-1 risk reward, depending on what you want to do. Or you could look left and say, okay, where's the next level of structure? That would probably be a pretty good idea too. This is not something that's set in stone as a strategy. This is just a technique I use to determine when I think a market is going to fall or rise depending on the candle wicks. It's just a technique right now, but it's absolutely something you can create a strategy around. So this is one example of that, a shorting example. Let's keep going here and see if we can find a couple of other examples of when the market tested an area with 5 wicks and kept bumping its head or kept bumping its feet. I don't know how you would do it for a long trade. We'll just say bumping his feet. So if we push down here, we're just looking at swing lows and asking ourselves, is there an area that's been tested 5 times as a swing low? And the answer is no. There's no swing highs either in this trend. And here we have an area. So right here, if we have a swing high, we're looking at this as in a downtrend. We're in a downtrend. We have a swing high on this green candle. The next swing high touches it. Then we would have to move our horizontal line up because this swing high is higher than the previous 2. But we're still under our initial swing high, right? So we're still under that. Then we'd have to move up again because of this candle. We would have to move up one more time. As we move up this one more time, if you'll notice, we have 1, 2, 3, 4, and 5 on this little green candle. 5 times a wick has tested this area and been rejected. Because of that, this would be where you would place your short trade. Stops above here, targets wherever you'd like to put targets. So that's another example of the 5 wick test that I'm teaching you here today. Let's keep it moving. See if we can find another example of this. Oh, right here is an example that I had already seen. So here's a good example of it again. We're pushing up, and these are all short examples, but there are examples of long trades doing this as well. I just haven't found one yet here on the pound Aussie, obviously. But we have our swing high. This ends up being our swing high. We put a horizontal line there because it's the highest body. If we look down from that swing high, this is the highest body. So since we have the highest body of the swing high pointed out, we have to count the wicks. We have 1, 2, 3. We have 4 on this little red doji, and we have 5 on this shooting star green candle. That shooting star green candle would be the entry, stops above here, targets down here, again, wherever you'd like to put targets. All of that being the case. Right now, I hope you have a decent grasp on this. We're going to go up to a whiteboard, and I'm going to explain it in a little bit further detail. Before we do that, though, let's go ahead and go over the pound Aussie trade that we took a look at the intro of this video. So let's go over to the pound Aussie trade right now. All right, so here we are on that pound Aussie trade we took a look at the beginning of the video. As you can see, this red zone, let me actually move over to the trade itself, which was right there. Okay, so here is the entry. right there on that big red candle is where we actually entered. But the reason that I was interested in this as a trading opportunity is not just because there was a lot of wicks here. Like that does play a part. That gives me an indication that this is an area I should look for a short trade. But then when looking left, I realized that this is an area that had been tested as resistance multiple times in the past. I would even count this as an area that's been tested as support as well. So because of that factor, the factor that we have this really important area that the market has reacted from, pushing the market up and down from this area, if you include that kind of analysis with this 5-wick entry that you've learned here today, it can make for some really accurate trading opportunities. And let's take a look at this here. In our red zone, we already know this is a zone we're paying attention to for possible trades. If we put a horizontal line at the highest body right there, we count up the wicks. We have 1, 2, 3. This was 4, and this shooting star, 3 again, I guess. This shooting star candle was a 5th wick that tested that area and actually closed below it. With that being the case, we now have the 5-candle wick entry that we've talked about throughout this whole video. I decided to place my trade after that, but placing a trade after that ended up being a 2-target winner. We hit our first targets pretty quickly, and the market pushed down. Why do you think I was interested in exiting the trade right here? Well, this was the most previous level of support, and when I'm looking at these levels, the important levels in the market, I look for 2 things. I call it recency and frequency. What I want is to see how recently the level was tested in the market, and I want to see how frequently it's been tested in a recent manner, how frequently it's been tested recently. It's a tongue twister if you say it a bunch of times fast. But we have this most recent level of support that was tested twice as support, and the market pushed it around in that area. We also have this as a level of resistance looking left as well. So that's 3 times this level has been tested. For the exit reason, once this market came down to that area and put in a double bottom, I wanted to get out at the close of that double bottom, go ahead and keep my profits, go ahead and keep as many profits as possible, which ended up being right at a 2-to-1 risk reward here on that pound Aussie trade. So in conclusion, and right before we go into actually looking at a whiteboard and studying this entry pattern of the 5-wick test, let's talk about what we need beforehand. Remember, you want to make sure that you're either, these are the 2 conditions that I would use if you're going to try to use this as an entry reason. The 2 conditions I would use would either be make sure a market's trending. We know that by looking at our most previous 1, 2, 3 move. If the market's trending down, then that's a level and an area I would look for a possible 5-wick entry. It's any time in this pullback before the previous resistance level. That would be a good area to look for a possible trend continuation play. We'll do a long example. So 1, 2, 3. Anytime after our previous resistance, right in here would be, a 5-wick entry anywhere before the close below our previous support level. That's what I would look at in terms of this being a strategy. Also, for counter trend, the only way I would trade this in a counter trend way is if we were at a level of structure that had been, I'm drawing that backwards. I am slightly dyslexic, so I draw shit backwards sometimes. Sorry about that. Let's do that again. Okay. A level in the market, remember counter trend trades, we're looking for a level in the market. Let's say we started trending down and then we started trending back up. I would want to see a level that had been tested multiple times in the past before looking for my 5-wick entry. And at that point, at a level that had been tested multiple times in the past, is where I would look for that 5-wick entry personally. Now, this is not something you need to go out and start trading right now. You obviously have to test everything I say, everything anyone tells you. Test it for yourself. Validate that it's profitable for yourself. Don't take everyone's word for it. This is something that I firmly believe will help you in your trading, will help you improve your entries, will help you improve the amount of profits you can make in the winning trades that you have. But it's not something I want you to take and just start trading blindly. I never did that personally. The only reason I'm successful as a trader is because I never took anyone's word as if it was set in stone. I always went out and was the mad scientist that wanted to test everything for myself and then even improve on what I'd learned. So do that with this. And now let's go to the whiteboard and explain exactly what this 5-wick test entry is. I'll see you there. All right, guys, so after an extremely long 30 seconds of thinking about this, I realized that it's probably going to be more helpful for you if I just show you on a chart instead of trying to draw out all these candles on a whiteboard. And if I'm being honest, I really don't feel like spending the time to draw out all these candles when it's just as easy to show you on an actual chart. So let's do this. Right now, let's pretend this is where the market is. If you're looking at the chart, we're on the right edge of the screen, and I'm just going to move the chart sideways and show you what we're looking for. We have our swing high, so we can already put a horizontal line right there. If something closes above this swing high, then we have to look for that as the next swing high. But if we have a close of a candle that's higher than this close, that's still below this swing high, then we just have to move our horizontal line up and count the wicks. So let's do that. As we move forward, we have to move our line up to that green candle. We now have 3 wicks. This is a 3-wick test. We move forward, we now have 4 wicks. That's a 4-wick test. And we now have 5 wicks. That's a 5-wick test. Right here would be the entry on this green candle, would be where you would want to actually enter the market if you're using this as an entry reason. Now, let's see what that did. Oh shit. Damn, I didn't know that was going to be a loss. I'm just kidding. What I'm trying to show you is that no matter what you're trading based on, you will have losses. It doesn't matter if you're trading the best strategy in the world. Losses are a part of it, so I figured I would point out a loss just to show you that everything loses at some point. And not loses like all the time, but everything will have losses at some point. So there was a loss. Let's continue looking here. And we have our swing high, but we don't have 5 because of... Let's move this up actually right. We have 1, our swing high, 2, 3, and we actually do have 5. So if that touches, I really don't think that that's quite touching. Man, that was a lot of work to see if it touched. Yes, that did touch. So this would be the 5th wick, and this would be another loss. Oh my gosh, I know what you're thinking. 2 losses in a row. This strategy is no good. This entry reason doesn't ever work. It's going to lose money, and that's all. Again, a huge exaggeration. Let's keep going and test some more of these. And we had a swing low here. Remember, we can do this in trend continuation and in counter trend. As we push lower, as we push higher, we didn't get any 5-wick tests. As we push lower, here we already have 4, right? We have 1 wick, 2 wick, 3 wick, 4 wick. We need 1 more wick to test that, and we have our entry. Let's see what happened there. Market shot up, would have hit targets, cool deal, because our stop loss would have been very small here. So we would have a stop of like, let's see, probably 40, probably 60 pips, and a target of 100 that would have gave over a 1.5, would have been a good entry and a good trade in terms of winning, would have been a winning trade. Let's see, resistance here, 1, 2, 3, 4, we only have 4, pushing, 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 we only have 4 there. Here we have 4 again. And that's going to do it. That's fine, guys. We have enough examples now where you should understand that we're looking for 5 wicks that are testing a body or testing an area of price. And after 5 wicks are rejected, either to the downside or to the upside, after those 5 wicks are rejected, it's a really good sign that the market's going to fall or rise based on the direction of those wicks being rejected. So that's the wick entry, the 5-wick entry I wanted to teach you today. That's how to spot levels of structure, to trade around, and how to trade them in trend. Also, if you're interested in learning more about the levels that I'm talking about, then I have some training listed below in the Pro Trader Report where I will point out the 3 to 5 levels that I'm looking at as my favorite levels of trading every single week. On Monday, you'll receive an email for that. Also, if you're interested in speeding up your journey to becoming profitable throughout an entire system, a 3-month program, mentorship program I run, then you can find the EAP Training Program listed below as well. That also comes with 3 to 5 trade alerts per week that I'm planning on trading based on the strategies and system that you will learn in the EAP training course. There's also free trainings listed below, and there's a video somewhere beside my face that I want you to watch because I think it can be really helpful for your trading career. Other than that, I want you to have a great rest of your week. I want you to trade green. I want you to smile because it's going to be an awesome day, and I can't wait to talk to you in the next video. See you soon.